Hey, what's happening, guys? Dan Dario here with another options and play video update. When it comes to options trading, I almost always approach swing trades with basically two separate stops. Okay, so one will be a net debit stop, and that's usually in the range of a 40 to 50% net debit loss, meaning um, if I lose 40 to 50% of the premium I paid for those options, I'll be exiting. Or the second way I approach a stop is with a technical level. So um, this will be for me, what a technical stop is would be a point on the chart where I feel like the thesis for that trade no longer is valid, right? So if it's a bullish trade and it breaks through a support level, the thesis has changed, right? Because I was looking for a certain pattern to hit, didn't work, it's starting to lose support, so it's no longer valid. Or if I'm looking at a bearish pattern and it starts to rise through resistance or starts to reset above moving averages, no longer valid, right? So swing trades for me, it's one or the other, but typically whichever one happens first. That's how I write up swing trades. Like event trades will be different because stops are going to be a little bit more difficult because a lot of the trade revolves around like a news, right? You might get a huge overnight gap. But when it comes to like a swing trade, they often develop more slowly, more chance to get in, more chance to get out. So when I approach a swing trade, I like to have two different types of stops, either a net debit loss, meaning if I lose 40 to 50% of my premium, I'm getting out, or a technical stop, which is if it trades through a certain level. So I'm going to go through Expedia as an example, right? So I felt like Expedia was setting up for another leg lower, right? So this was a trade that first started, or the trade was first set in motion after earnings, right? Disappointed, stock gap down, put together a quick bear flag under the 200A, was met with the ADMA. You guys know how much I love the ADMA catch-up trade, right? ADMA caught up, set to turn lower, right? And the stock had a really great move to the downside. Then on the bounce, it was hanging out at a lower level, right? You had the 20-day, which just joined, and that was starting to provide downward pressure. But over the last week and a half, it's just been really, really choppy, spinning around. It's had like some mixed moves, rallied in sympathy with Airbnb, and then today it's up off a positive analyst note. So there's a lot of like back and forth. It's not breaking down. At the same time, it's not breaking out. And for me, a technical stop on a bear trade like this would be above the top end of resistance, right? So when it starts to clear the top end of recent resistance, which is like around 149, 149.50, right? That's going to be the point where I say, okay, the thesis no longer is valid, right? Because it's losing or starting to reset above that resistance. It's starting to reset above moving averages, and it has an open path to the upside. So the bear thesis no longer stands, right? Now, when a stock hits a technical stop for my option trade, I'm not just going in and immediately selling market, right? What I go in to do is I look at what the option spreads are. Then do I want to limit, right? Is it like slow moving where I want to limit and try to get out, like with op with um, on the offer, right? Like, do I want to like have like my offer to get out, like sitting there and somebody picks me off, or is this like really fast moving where I really need to get out quick, and where that case, either I'm selling closer to bid or maybe I'm even selling at the bid, right? So I'm not just when it hits my technical stop, I'm not just going into the market and just dumping them whatever price, right? I want to go
On
in and still get the best price
NYSE
possible to
volume
get out
coming in
of
at
it,
540
but
million.
what I need to do is go in and see like, okay, like where is the bid ask? Is liquidity good? Is liquidity bad? And how's the stock moving? Is it fast? Is it a fast moving where it's like moving maybe on news and volume? In which case I got to be more aggressive or quicker, or is it just like kind of grinding through my stop and I can like sit on the offer and try to get picked off at a slightly better price, right? So that's what I mean when I say technical stop. It's a price on the chart where the trade thesis changes. Once it hits that, I'm going into the options market and I'm looking to exit the trade. How I do that depends on how the stock is moving. All right. So something to keep in mind. There's a little bit of an uptick in volatility. Some things are moving around. Some things are losing upper levels. So if you do have some swing trades on and they're starting to get close to your stops, just make sure you have an exit strategy, right? Make sure you have a game plan with how you want to approach those if they start to move against you or if the trade starts to change, because the last thing you want is to just let the stocks lose the upper levels, see the options, start to lose premium, and all of a sudden premiums evaporate and then they're worthless, right? And they expire. So just make sure you have a game plan with how you want to manage these things. So that's really what I want to talk about. All right. So if you like this video and you're looking for more information on swing trading with options or how I manage my positions, please follow up with the link in the description of the video for more information on options to play. Have a fantastic night. Stay well, and I will talk to you all tomorrow.